So at the beginning of the day, do you guys remember my buy zones on Google? I want you guys just to understand how I trade so that as we do this small account, you'll understand what I'm doing. So this morning I said Google, I'm going to buy at 193. I'm going to buy Google at 191.50. And then I'm going to buy Google around 190. So I did get filled on 2 of those positions. With the price movement of what happened, how much of that do you guys think I have left? So like I got filled here. I got filled here. Yeah, so I have at least at maximum this one full position and then half of this position. At minimum, it would be I only have this position left and I've sold this position to lower the cost basis. Does that make sense what I'm saying? So this is how I dig ditches, and this is what we've been doing in Apple, and this is what I'll continue to do in Google and Apple and everything else that I trade. Is what I always do. Now today was a great example of Apple playing a zone within a zone. So the zone that we've been playing, it's actually starting to form a little zone above it. So just using today's volume, I mean today's chart pattern, I got into Apple on my large account, but I got into Apple with options instead of shares on my large account. Can anybody tell me why? Why am I deciding to go with options all of a sudden? We've been buying shares. And again, this wasn't an ETF trade because the room wasn't open, and so I didn't want to put it in the ETF account. But if it was available, I would have. Well, yeah, it's always sure, but that's always the case. It's cheaper and there's higher leverage back here. Why wasn't I doing options back here, but I am doing options here? And the answer is because the chart pattern's telling me so. Why is the chart pattern telling me to? Well, the chart pattern is telling me to because it's actually getting to a higher percent chance of a breakout now than it was yesterday and the day before. Well, why is that? Where are we in the chart pattern? What is the chart pattern? Well, if you look at the chart pattern as a whole, right, we've got this beautiful 195-minute pattern squeezing, trying to fire up, right? This looks beautiful. So what does this consist of? Why is this chart beautiful? Okay, well, you've got this ascending triangle starting to take shape within this woodpecker, right? Your woodpecker pattern. And it's trying to break out. Okay, well, what is happening within this little zone? How many times are we testing the highs now? So within this entire pattern, we have a cup and handle taking shape. And all that means is it's basically a double top. And you're getting a little pullback. What is this little pullback called? What do I call it? It's your little U, right? Yeah, it's your little U. So that's when I want to take shots on options because I know a decision is going to be made relatively quickly. Either I'm going to lose or I'm going to make money. And I know within the next little bit, it's going to fire one way or the other. Now, you can also see that on many other things. Like, for example, if we went to a 15, 30 hourly squeeze, right? So you see how the hourly squeeze is starting to go. The 30-minute squeeze is trying to fire. The 15-minute squeeze. So you see how all these squeezes are building up, which means a move is imminent on these smaller time frames. And that's what's creating the little U. And so now I know that the probability of a breakout is higher today, could happen today, than it did yesterday. Does that make sense? And so that's why you swap to options so that you can not get thetaed as much, right? Like if I would have bought an option for this week back here on it would have been maybe, let's say I would have bought it right here, right? Like maybe I bought it right here. And even though we're up, I probably would be down because of the theta. The chart, because the price is higher, but we didn't go much higher and it's been a long time, I'd probably be down. And that's just you're getting theta. So as this small account goes into full effect next week, I want everybody to understand what I'm doing, why I'm doing it, and how I'm going to leverage and grow the account. Now, one of the things that I've noticed is some of the plays happen extremely quickly, and I can only take them on voice. So I want everybody to understand that there will be trades that I take that I can't be on voice to take, and I'll put them in chat. But if the room's closed, like let's say it's happening at 5:30 in the morning, and by some chance I notice a thing running up in the morning that I want to jump into, I'll put that on Twitter. And if I have the availability, I'll open the chat room actually, and I'll throw it in chat. But if I'm not, like if there's something else going on and I don't want to open up the room because Nate's doing something in Sector Strike or JC's doing something or something's happening in the war room and the room's closed, then I'll do it on Twitter. So I bought two different options. The August 1st. So you've got next week's, right? Those are ones that I would be willing to swing for a few days if Apple decides to start going. And then I've got the tomorrows, the first. I'm sorry, the 25th, right here. So I bought two, and my goal is to take this week's, make enough money on this week's to pretty much pay for next week's, and then it's a free trade. Yeah, Furu Cooler is a Twitter handle. So the play that set up today was right here. I'm laggy on this thing, sorry. Okay, so now that we've talked about Apple, what setup is this? What should have been our risk profile? Where should we have risked to? Like what pattern are we playing? So this is a zone within a zone that we've been playing Apple all week. We want to add the winners. We want to stay with it. What is this setup on the screen? When I say setup, what was my edge and what am I doing on buying Apple right here, right now, as the chart looked like this? I did not buy Google in the small account today. I bought it in the large account. You're right. It is a back test of VP. It is coming back to point of control, but that's only part of it, right? What, which is the probably the most important part. But what the pattern tells us is important. Understanding what the pattern tells us, because that helps you understand risk, where you want to put your stop out, and what should happen if it breaks down. So does anybody see a right? I just went over this, right? Does anybody see this cup? And what is it putting in? A handle. Why did I wait for it to come to 214.50 area before I bought it? It's a cup and handle. So why did I wait for it to come to 214.50 before I bought it? Why didn't I buy it at 215, 215.25? Who knows where the handle's going to stop? That's because of the point of control in VP. So you guys see how we're piecing it all together? So you've got a chart pattern, you've got a pattern within a pattern, the 195 TTM squeeze ascending triangle, creating a little U, and then you're creating a little U within the little U, right? So this is what we're doing. This is how you continue, you play this through, and ultimately the goal is to fire this ascending triangle up and into this next high of about 225. And I want to be loaded into Apple when that happens, right? So I want to get in this and create as many profitable trades that allow me to have a good cost basis so that I can take this thing and make a lot of money when it decides to go up. Same thing on HIMS, right? That we just did. So anyway, I hope more than making money, I hope that being able to see this happen over and over again, and I'm going to make videos on this. I hope that you can do this by yourself. I hope that honestly, to be selfish, I hope that you can see them and then say, "Hey, Donnie, this is setting up on this chart," and I'll be like, "Great, I don't have to do any more work. I'm just going to log into the room and they're going to tell me what to do." Right? Um, so Doc Moose, that's a great question, and there's no specific answer. It depends on what you want to do. When I'm buying great companies, my ultimate target is always all-time high. So when we were buying Google in April, when all the panicins were going crazy, my target is all-time high. When I'm buying this pullback because self-driving cars are taking over the world and AI's not going to need Google search anymore, all-time high. My buyback here, all-time high. My target's always all-time high for the good companies. However, within these patterns, I am buying and selling and taking profits, just like I'm doing on Apple. So you guys remember when Google broke out? And I'm like, hey, it's ready. It's getting ready to go. Okay, here we go. We're gonna do it. The same thing on Amazon. Remember, Amazon was breaking out, and I'm like, this pullback here on Amazon. This is it. We got to get it. So what's my target? Well, my target's always all-time high. But this pullback that I bought right here on this trend line, I'm out of this by the time it hits up here. Because I bought here, I bought here, I bought here. Does that make sense? Yeah, I'm going to teach you guys how to fish. I'm going to teach you how I fish. Dig a ditch, let the money start flowing in, and then get the heck out of the way. Just let it go. Baba? Yeah, I think so. Again, because you are trading China and the multiple exchanges, it's harder to intraday trade this. So I rarely intraday trade Baba, but it's the same idea, right? So like when it was pulling back to the 100 level here, if you can take it back up to this VP, I'll sell some. But right here on Baba, um, this isn't a buy area for me. I wouldn't buy it up here. But it's also because I already bought it here and here and here, right? And here and here. So Drew, that right. So let me ask you a question, Drew. Put in Drew, Apple. So now that you got your cost base down there, what should be your stop out? Your stop out for those pieces. What should be like? Hey, you know what? If Apple does this, I got to get out the way. I have anytime it gets close to 100, I've been buying at Baba. Absolutely. And the correct answer, Drew, is when the chart breaks, right? When the chart breaks is when you should get out of it. Well, where and when is that? That's the question. Well, how do we know? Well, we're not playing this candle, this candle, this candle, or this candle. We're playing this pattern. And so now that your cost basis is down around 207, do we have a free trade? Well, let's look and see where this breaks. Sorry, this thing's super laggy. I never know. All right, so we're playing this upper flag. So worst case scenario, right below this level, it's going to come down to the next zone. So this is what I would consider value area low of this entire range. So at worst, that would be the stop. Then what you have to ask yourself is, because we have broken out, right? You see this downward trend line, we've broke up, we're starting to flag. Do you want to hold it all the way down to 207? My answer would be no, I don't. Well, why? Because when you get a failed breakout, you often get a failed breakdown, and then it kind of reverts and decides where to go. So for me on Apple, it's like, all right, think of it as value area high, low, and point of control. Once you break out and start moving, I don't want to come down that point of control level. Now, when you look at Apple, it's like, well, that your point of control is right here. See that? That's your point of control. That right there. And so it's like, all right, well, if you break down that level, are you going to stop out? No. I view the point of control as this. If I can make my anyway. So the hard stop for what I've got left, Drew, is down here. We start breaking below this. I think we're going to come down here and test that. We'll break below that and break out, break down, and then it'll figure out where it wants to go. So for me, I have a free trade because this is the area that I'm now risking off of. Now, what happens a lot is it does something like this, comes down into this box, reclaims, and then does this. What do you guys think I do at that point? Man, I get so happy. I get so happy. We just had a failed breakdown. That's my favorite. We just watch everybody else like me. Great. Most people won't buy back in like I will. They're going to wait till it goes up, and then they're going to buy back in. So yeah, let's play the break and the reclaim. Yeah, let's buy it. So I don't care if I get stopped out. I'll watch it. You know, if it comes down to the next zone down here, and it's still a beautiful pattern, I'll buy it. If it doesn't, if it reclaims, I'll buy it. Do whatever the chart tells you to do. Don't argue with it. For all you men out there, just pretend the chart is your wife, and there is absolutely zero that you can say that's going to make her wrong. So just do it. Just shut up and do it, right? Oh, I'm kidding. I'm kidding, of course, ladies. Anyway, all right. So let's see if we can find a trade setup, and let's do a quiz. I'm just going to throw something on the chart, and we'll see if you guys can figure out, hey, what's the setup we could do? What's the chart pattern? What's the VPs? Like all of it. All right, I'm just gonna whip through. Let's start with Carvana. All right. So if I were to show you this chart right here, how could we apply what we just learned with everything we did on Apple? Now, again, I'm going to give you a little hint. Let's start wide out, right? Like this is the daily. What's the trend on the daily? It's up and to the right. We got a great bullish chart. All right. Where are we now? What's the pattern that's shaping up right here, right now? So Doc says bull trend support at 310. So here I'll throw a 310 in there. That's our Doc line. We've got head and shoulders, bullish pennant, flag. So all of these can be correct, right? Shoulder, head, shoulder. Flag, right? Okay, so now how do we decide how to play it? How do we decide entries, exit, safety, risk, chart breaks? No, it already is. It already is a rest strat, right? You did. You have a possible rest strat, right? So would you want to play it? Yeah, you would need the wick longer if you would want to play it, right? But as soon as it breaks, you have a possible rest strat. Whether you take it or not depends upon the wick. Set the themes with VP. Yeah, exactly. So let's go ahead and look at it. Let's break it down. All right. So the first thing that I want to do is figure out who's catching us down here. Meaning, who are the people that are going to start buying? Where's that zone? So where would I find that from, guys? So where should I start buying over here? Do I got to wait till 310? Can I start at 330? 320? Like what levels do I need to start buying off of and risk? How would I figure that out? So yeah, it's volume profile, but who do I like? You guys ask a lot. Hey, what time frame do you use to go back on a volume profile? What time frame do I need to use to see this VP? Well, the only thing that matters is the people before you. These guys. We need to zoom into this area as detailed as possible to figure out where the buyers are going to be coming from. Does that make sense? Because that's who we're starting to butt up against. And so what I'm going to do is I hate my TC2000. It's laggy. It's been laggy for days, and they keep telling me things to do to fix it, but nothing works. So what I'm going to do here is I'm going to break down from that level to that level. And let's see where the biggest chunk of VP comes from. Do it 15. So I'm getting as tight as I can on the time frame. So 15 allows you. What about 10? 10 allows you. What about 5? No, 5 minutes. So I got to use a 10-minute chart. So now I've got this group of people. Now I'm just going to zoom into them. So frustrating. Okay. So it looks like to me, you see this level up here? I think this level will bounce for sure. You've got some pretty strong peeps up here. Right? You see how that's the largest bar? That's the largest bar. So this zone I think would give you a bounce. And if you wanted to say, this zone, that's fine, like within that. Now, if you wanted to say, hey, you know what, there's also a VP down here, let's play that entire zone and say buy one here, and one here. Sure, you could do that too. I wouldn't do that. I would keep it a little bit tighter and stop out up here and then try to get lower if it came. All right, so now undo zoom. So now we've got this general area in between these white lines of where that support's going to come from, right? Now, the only other places that these areas are going to come from for support would be in this trend up, right? You have these people. Well, we can dig into them in a little bit, but the more important people are these people, not these people. And so these people are the latest ones, and they bought here, made money. Maybe they'll buy back. So now what I want to do is I want to zoom in to right here. Okay, so in this zone, what you have, I'm going to make this a little bit different color. We'll make it yellow. Right, you've got this entire zone, which is 27, 37. It's $15. There's $15 of a zone here, right? Which makes it a little bit hard to play. And so what you now have to do is you have to zoom into each zone. You zoom into here and say, all right, at what level does this break? At what level does this break? And then what level does this break? Because the price is already below these two, the only one that I really care about is 327.73. So I'm going to zoom in again to right here. Yeah, I'd say the lowest that I would let this go is 327. Um, you could argue 326 and try to double bottom it off of that. So pay attention to what I'm talking about as far as charting, right? Because that's everybody uses charting. So this would be like another bottom off of that, making a lower, making an even low. But yeah, I don't think I'd want to do that. So now what I'm going to do is I'm going to undo zoom, and I'm going to look at the daily chart just to kind of see where everything is. All right. Well, is there something within this that I could play now within my edges? Well, if we look at this and we switch it to a 195, what do we have? We actually have a TTM squeeze that's literally sitting on the bottom Bollinger Band. So we could put on a trade right now that says, you know what? If this closes below 327.33, I'm out. But I'm going to target 337 and then 343, and hopefully it can start to curl. And that would allow us to follow our rules about stopping out if it goes below the lower Bollinger Band, right? See how it closed outside the lower Bollinger Band there? So that should have been a stop out. So if we're not in it and we want to take a shot, that would be the edge that we would play and how we would risk appropriately. So we just set up a brand new trade on an edge that we could play that keeps us safe, that would put us in the stock that's going up and to the right using a 195-minute squeeze. Now the question would be, all right, if you don't want to buy the shares, should we buy an option for this week? Should we buy an option for next week? A month out, 2 years out? Well, the way I do things is a little bit different than Nate. Nate does a lot more shorter dated calls than I do. So for me, when I'm starting to absorb into certain areas, I don't want to buy lottos. It's fine if you do. There's no wrong and right in the market. But what I would tell you is I can't tell you from a charting perspective that this thing's supposed to start ripping. What I would look for from a charting perspective here is if we can bounce back to this area, what possible pattern could be setting up, right? Head, shoulder, possible shoulder here, right? How many days is that going to take? It'll take a few days for that to happen. So it's going to take a lot longer for this to break out and start going than it will the Apple chart because of where we are in the pattern, right? This one's, I mean, it's ready. Like this one is ready to go. Like this thing could go today, it could go tomorrow, it could go Monday. Like this thing, it's going to fire one way or the other. It's either going to do this, right? And then stop everybody out in this flag and then start again right here. Or we're going to make a lot of money. It's just going to rip up, right? Like this thing is ready. This one, For me, ah, I can't tell you it's ready to go. It needs to stop going down first, right? You need to absorb it and then go out. So the earliest that I would buy on a chart like this would be next week's. That's the earliest. I would probably buy next month's. I would buy the monthlies for next month. That would be that would give me enough time. Does this make sense, guys? Any questions on all this? Am I recording? Yes, I am. So again, Doc Moose for the recording. He asked a great question. D-Man, for Carvana, how would you set up your buy here, a buy alert here for a price target? Like where are we wanting this to go? How are you buying it? Literally, you could buy it now because it's in the buy zone, right? So you could literally buy it right here, right now. So you know, look for a 350 option for next month and say, all right, I'm buying this 350 for next month, and my stop out is via time with an option. You have to have that in, but according to the chart, it's 327.33. We start breaking that down, then maybe I want to play it off of these levels or these levels, whatever. But like I don't want to play this below this level. That's where the chart breaks. For you guys that have been trading for me, where would I begin to take profits? What would be my first profit area on this? Rally for a short squeeze? Excuse me. The lowest that I would ever set my stop loss on the value area lows. When you're looking at a value area low, I'm going to show you something real quick right here. So what you have to ask yourself is, where is that bottom level of this value area low here? For me, it's right here, right? Like that, you start getting below that for sure. But ultimately, it needs to hold basically right there. So again, there's no right or wrong answer in doing this. It just depends on how you want to enter the trade and or exit the trade with your risk profile. But the lowest you should allow this to go, in my opinion, is right here around 326.15. I would put my stop closer to 326.50 and use that 327.50 option price level and say, you know what, I'm going to give you $1 off of that. But if it starts cracking below this line, like I'm out, I'm done. Like there's no you know negotiating or saying, well, it may bounce here. You know the stupid stuff that we do. Um, and so like that's your stop out, no questions asked. And then your target, in my opinion, should be the very next zone. So where is that? Well, that zone, excuse me, is made from here. Sorry, guys, this thing takes forever. It's like a 2-second delay now. And then you have another one here. And so, is it wrong to say you should take some when it comes back up to 335? You've moved $6 from when we've been talking about this. No, it's not wrong. If you wanted to take some because that's hitting the resistance here, great, take some. If you wanted to wait till it hit this higher level, great, take it there. But this is another zone that you should be taking profits in. And then when we hit the other zone, 343, right, then I would take even more profit. So for me, the way that I would look at this is, your sell points would be each one of these lines has a value area high, low, and point of control. And so on these two green ones, I would take profits between value area low and value area high on these two lines. Anywhere in that group is fine. Does that make sense? Let's see. Yeah, Nate does that quite often. He's like, "Come on, guys. I know we're not supposed to do it." I bet Nate was that kid. In reality, it was me. I was the one. But let's blame Nate. Hey, let's jump off the bridge. It says don't jump off the bridge. I didn't have a father around, so I didn't. I was the troublemaker. Good, Doc. Most. So this is what we're going to be doing, 1,000 times with a small account. Again, if you miss a trade or two or three or five, who cares? Well, I'll do it. I'll do it again with you guys. That doesn't matter. What matters is that you can go back and look at a chart and say, oh, this is what statistically the odds say have a higher chance of happening. If it gets below this point, that breaks that statistic and enters into a new chart pattern via double bottom, via head and shoulders, via inverted head and shoulders, whatever it is. Now the probabilities are this way. And that's how you know to stop out or to get in and where to put your risk profile. Yeah, man. Yeah, it's primed. Yeah. Yep. It's funny, man. It's like I'm not a crypto guy, but like I feel like I don't have enough exposure to this. Same thing with Ethereum. Like, man, yeah, just they look ready to rip. And it, no, nobody go buy this right here, right now, and put your whole account in or whatever. Don't get me wrong, but these charts that are using the treasury strategies, like they're starting to try to curl. So like this BMNR, they put out a press release today that um, I think it was they had 2 billion in Ethereum. I think that's what they said. I haven't checked it, but here let me double check before. So BMNR. Yeah, so Bitmine Immersion Technology shares are trading higher after the company announced its holdings have surpassed $2 billion. So you guys tell me, what's the way that I can see how much BMNR is worth, the company? How do I tell how much BMNR is worth? Is BMNR worth 2 billion? Or is it at 1 billion? Because if it's at 1 billion, I need to buy it. Because we got $1 billion of discrepancy there. Their assets are at 2 billion and they're only at 1 billion. How do we do this, guys? Anybody? Does nobody know this? Yeah, okay. So maybe I'm being a little too simple with it, but you're gonna have to add together debt and all this other stuff, right? But if the company is worth $2 billion, we would just look at the market cap, right? So what's the market cap of BMNR? 2.23 billion right now. All right. So let's we know that they've got at least 2 billion in assets, right? How much debt do they have? Well, shoot, they've got 250 million in debt. Man, if they drop to 40, I'm a buyer. because that's just what the company is worth in and of itself. I know, right? It's funny, Nate. I was looking at those. So here, let me ask you a question on these, because so when I looked at them, Nate, it's like I the problem that I have because I trade a larger account. It's like, do I want to buy the 60s or do I just want to buy the underlying? And then it's like, well, if I'm going to buy the 60s, then let me buy the 40s or 45s, because then when it goes up, I'm going to make a ton of money. But then it's like, well, shoot, look at the spread. It's 550 to 6, 730 to 8. It's like, I ain't buying that. So I guess by default, I have to take the 60s because there's only a 20-cent spread there. That's what makes trading options harder for me. And it's like, uh, the answer is simple: buy both. Yeah, I agree with it, and I do that quite often. What is let me check something. Man, if we can get a gamma squeeze going on this, dude, this thing could pop 70, 80, $90 quick. But anyway, here's the chart pattern that's breaking out, right? And trying to get going. So you guys see this downward trend, right? Call it the upside down Woody the woodpecker, right? And now it's starting to break out, and this is what triggers a waterfall of stops, right? Because you've got lower high, lower high, lower high, lower high, and if you can start beating those areas, that's where your shorts start covering and your algos start buying. Is anybody still in bull with me from the trade we did a couple days ago? This is another chart that I just love. Love this chart. Curling. Wish I had more short float, but anyway, I'm all about buying these crypto names. Is anybody still holding the far dated Galaxy calls that we got? Nobody? You guys have sold it off? Oh, we do. Okay, yeah, good. How about you guys up? It's funny because what I literally do on these is I actually move them. Uh, I move them out of my day trading account because when it starts getting to 200%, it's like 100% is nice. Like I can take some off and now it's a free trade. Then it gets to 200%. I'm like, come on, am I being a pig? Am I being greedy? And then it's 300%. You're like, oh, so like what I literally do is I'll move them out of my day trading account and I'll put them into my other account. So I don't have to look at them. Yeah. 250, 300. Guys, I can't tell you where to sell. I have no idea. Is this going to be the top? I don't know, but I can see this thing hitting 50 too. What I will tell you is something that we haven't talked about here that we should talk about is like when we're making the plan with Carvana and or Galaxy, you got to make sure you understand when the earnings are. Do I want to buy something past the earnings date here on this? No, I wouldn't. So I said I'd go out till next month. Well, I'm not going to hold this through earnings, so there's really no point. And so if I look at this and it's like, all right, well, 7:30 is the earnings date, then obviously August 1st would be the one that I would play. You made 175% on it? Nice. Yeah, those are the ones I actually pay attention to, Nate, because I still have to keep digging
Boeing
that ditch.
FAA
Once
chief
I've dug
says
the
their
ditch,
India
it's like, get out of
787 crash does not
Just
appear
make me
to
money.
have been caused by a Boeing fuel control unit.
Are you guys still holding the RSP January calls? I think those went up to like 80% today. But all right, guys. Does anybody have any questions for me? I'll do a quick run through to see if there's anything that I really like here. Apple, of course, is beautiful, setting up. AMD, if you can get a squeeze on AMD, absolutely. Amazon, I'm already in, we're playing. So ANET I like as well. If I can get a squeeze going in ANET, I'm all about it. There's just nothing happening. APLD we bought, was it yesterday or the day before? Right. I didn't get my $10 ad, but again, this is one where it's like it's the
Boeing has
crypto
not
boom,
asked the
right? It's like
FAA to boost the current 38 plane per month cap on 737 MAX production. That's BA Boeing.
the $12 calls for next week on this are only 66 cents. Yeah, I might get some options on this one. How am I playing Etsy? So what I do on long-term stocks that I hold is I will sell calls at the ranges. So covered calls at the range of the expected move. So if you were to look at the expected move on this next week, so like I wouldn't do it today, but starting next week, I would look at the range and I'd say, what's the expected range? Do you know what I mean when I say expected range? Does everybody understand? Like what the implied move is? So an expected range is when you have the market makers are pricing in how far up or down the stock's gonna go. Sorry, I just heard somebody scream and I was like, I think my wife turned on the television. Um, so if we come over here and we look at earnings and some earnings that are going to come out like Intel, DEC, all these companies that have earnings coming out. If I come over here and I type in Intel, there's an expected move up or down, and the way that you can find that out, a lot of I think in Thinkorswim it'll tell you what the expected move is, but if you don't have that, all you got to do is look at the value of selling an option and a put, and it'll tell you the expected move. So Intel's expected move, what they're pricing in, is right there at 7.3%. See right there, that's your implied straddle. That's what they're expecting. The options are pricing it in. And so if I came in here and I said, all right, I'm going to do a short straddle on this, and it expires tomorrow, there's your expected move. So they think it's going to stay in between these levels. So do you remember what I said was the expected move? About 7.3%. Well, if you were to look at where we are, it's about 7% up and about 7% down. Right? So that's what we're talking about with an expected move. So I'll look and see what the expected move is on Etsy, and I'll sell a call at the upper range. So like on Intel, what that would look like is I'd be selling a call at $24.70, $25. And then I will sell for me a put where I feel comfortable buying it, which is the lower ranges. And if it stays within that area, then I get free money. If it goes outside of that area, then they're going to take my shares at that high point, which I'm fine with, or I'm going to buy shares at the lower point, which I'm also fine with. If you're not fine with buying the shares at that level, then don't do it. So that's how I always do long-term holdings through. I become the market maker and use that. Oh, I didn't even realize I had. Yeah. Okay. Sorry. Here. I had Charlie. I had Charlie going. Yeah, that's what it's coming from. I just cut that off, so you shouldn't hear it anymore. The ding ding or something. Yeah. Sorry about that. Yeah, it's orders on flow algo is what it is. So the ding ding is just this. Let me see something. What's happening with Apple? All right, I'm going to do something, guys. This is going to be an ETF trade. I want to do this so we have multiple positions on, and we can play zones within zones by doing this. I'm going to buy one option in the small account for next week at 220. And what I want to have happen here, right? I mean, this thing just looks primed and ready to go. I'm going to keep this option pretty tight. I'm not going to be playing this option if this thing breaks down today and this little pattern starts breaking down, right? I'm buying this because I want it to go. If it starts breaking down, I've still got my shares. I'll cut the option, and then I'll say, all right, let's reattack maybe tomorrow. So what we have to do to keep ourselves safe is put in a stop. So what do we feel comfortable losing here? So for me, I think about the range up. I think it's got a $10 range. I think it can get to 220 then 225. So let's just use the $5 range. If this stock moves $5, how much is it going to go up? How do we figure that out, guys? So it'd be between 175 and 190, right? 180, 190. That would be our profit. So if we divide that by two and we made that our risk, that gives us about 90, 95 cents. How many dollars down is that? Well, that's about three. It's about $3 lower, right? Do we want to hold it for that long? No, I know. The most that I'd be willing to hold this is probably a dollar, maybe $1.10. All right, I paid $2.79 for it. The delta's 40 cents. What does that equal? All right, it's gonna be about 230, right? If I'm gonna stop out at 230, why not just buy another one, right? Maybe I should buy one at 235. So here's what we'll do. I'll say I'm gonna buy one more at 230. I'm gonna stop out at 220, and then the profit targets are gonna be on the add. It would be the first entry, which is 279. On the not add, the first one, it's going to be that $1.80 higher. Does that make sense? Yes, yeah. So ETF here on Apple, we're going to buy one contract and we're paying 279, 280 for this. We don't want this to drop below $60 of loss for us, which is 220. But as it pulls back that, dollar or whatever, and it comes into here, I'll give it another shot by buying one more And so what's my total risk on this options trade if I'm stopping out at 220? I'm sorry. 220 price of the option, not the underlying price of the stop. Right? So I'm paying 279, I'm stopping out at 220. What's my risk? Yeah, so it's $60 plus the $10 that I bought on the second option that I'm buying at 230, right? So I'm risking 70 bucks for on this trade. And if I can make it work, I'll make 180, 190 bucks. And if it fills me on the downside and then it works, how much money am I going to make? So if it fills me on that downside and then I sell that down one at my original buy, right? So I go from 230 back to 280, that's an additional 50 bucks that I'm going to make. So if I get filled on the downside and it works, I'm going to make about 230, 240, right? These are the ways that you want to set up trades so that the math works for you. And you have to do it according to a chart within the VP levels that match. It can't just be arbitrary. Yeah, I still have some 815 calls on him. Yep. I hear a voice. Someone's mic, Efren. It's your mic open, dude. It's all right. No biggie. Yeah, so here, I'll put it in chat. So, ETF bought to open. 1. How does Nate do it? He does the ticker first, Apple 220, call for 280. Add one more at 230. Stop loss on both at 220. Profit target is $5 higher, so plus 180 on the option. How would I word if filled on lower ad, sell that ad at original entry price if it bounces back? I don't know. Is that clear as mud? Texas lawmaker. They're gonna make weed legal in Texas. I never thought that would happen. A lot of people in Colorado hate it. They say that they ruin their state because they did it. Can we get a flow chart for this trade? Right. So it's funny, like what Nate is talking about, like the review, that's everything, right? Like that's how I learned. That's if you can follow and understand what they're doing. Like, why am I selling my original buy? Well, the reason I'm selling my original buy, I'm selling the ad at the original buy is because support becomes resistance if it's broken. So you go down there and you go to the next support zone. If you bounce back to right where you were, that's resistance. I buy support, sell resistance. And it's so funny. Like, my entire edge is I buy support and sell resistance. That's it. Such a simple thing. You know what else looks like it's ready? Nate, have you looked at Datadog? Are you in this? This one looks ready too. So can you guys tell me why I'm saying I think this is getting ready? I don't think it's as ready as Apple, but it's getting ready. What I mean by that is anytime that you're above the main consolidation area, right? Like, and you haven't broke out and gone, it's like, all right, it's getting ready. Now, what's the worry? Well, we did make a new high. We didn't push, right? So, okay, what do we need to do for that to happen? You just need to hold. If you can hold this level, the VP, right, you'll be good. You start breaking that down, that's when it's like, all right, yeah, I'm going to get out. The chart's broken. It's going to come down here and break the lows of yesterday's candle. That was in your doghouse. You're holding all your shares of Datadog in your doghouse. Okay. Do you guys want to do that again? Do you want to find another chart and say, hey, what kind of edge could we play? What could we do? I mean, I'm in Dash already, but that's not really setting up for now. It's too late to buy that one. Does anybody see, or maybe Nate? Nate, if you would be so kind, if you can find one. It's been harder for me to find one this week. Is there, not saying we should take it, but is there a chart that you see a play possibly setting up relatively soon? You got anything like that? And then I don't want you to tell them what it is. Let's make them find it. Tell me what that play is. That makes sense. So like here, let me see some that we've been playing. Yeah, here we'll try CEG. So what is, again, the language of charting? What is the chart telling us here, guys? Like what pattern is there? Is there a way we could play it? Can we play it safely? Where should we enter? Where should our stops be? Right? So like obviously anytime you get up around 340, people are dumping that thing, right? Remember over here, it's like they had great news and it just sold off all day. We hit it and it's just like sold off. So like there's some distribution up here, right? Okay, great. There's also a lot of accumulation down here into these moving averages, right? So there's going to be some VP in here. Well, we gap up, we sold off, we're coming in to fill this gap. Okay, well, shoot, on a gap fill, maybe I would like to buy a daily TTM squeeze on CEG if it lines up with a good volume profile level. Maybe I need to wait till it comes down here to the 21. Well, what pattern would that be? Well, ultimately, what you're looking at is a double top with a little U, right? So it's like bam. So now we're hitting that little U. I'd like to buy that. So what does that mean? Well, shoot, I'd be willing to buy shorter dated options on this one than next month's because it is consolidating and it's been consolidating a while. It's getting ready to break. Does that make sense? So again, this is how you set up these trades and how you use all the tools that we've taught you to say, hey, how do I get my entries, my exits, and how do I keep myself safe by creating stop losses, not arbitrarily by saying, hey, whatever, I'm gonna risk this. It's, hey, I'm gonna risk this because if the chart goes below it, the chart is now broken, and I'm gonna stop out. I'm going to know the chart's broken, which is going to alert my head immediately. If it reclaims that, what was it? Oh, it was a failed breakdown. They just stopped me out and everybody else. I need to get back in this thing. And so the chart's telling you something all the time. So the question is, when you need a little bit more consolidation on the handle cup? The answer would be, I have no idea. If it does consolidate for a couple days high and tight, absolutely I'm going to jump on it, right? You never know what it's going to do. It could absolutely go down there and just bounce. Who knows? But the more it consolidates in an upward trend, the higher likelihood it's going to break because you're going to have tighter time frames like the 5 minute, the 15, the 30 consolidating on there. And that's exactly what's happening on Apple. That's the difference. So you see, did I know Apple was going to bounce off at 212, reject off at 214, 215, come back down and consolidate for a couple more days before it decides to go and or break down? No, I don't know. But as we get tighter and tighter, the chances of it breaking in one direction or the other grows. So you've got an exponential, you've got a much higher opportunity that this breaks one way or other simply because of the tightness of the pattern. Eventually, you're going to run out of room and it's going to have to choose. Does that make sense? Someone said IONQ. Yeah, I'm actually still in this. So this one, this one's kind of interesting. It should have broke, right? You had your 1, 2, 3, right? It should have broke. 80% of the time, this breaks. Well, this is the 20%. You never know, right? You never know which ones are going to work, which ones aren't going to work. I'm still in this, but the earliest call I have is August 15th. Because if I would have bought IONQ up here like I'm buying Apple, and I'm like, let's go, it needs to go. Well, it didn't. I'd have to stop out of those. But has the chart in and of itself done anything wrong? Like, is this still a good looking chart? I think it's a great looking chart. You've got an inside weekly forming today, or forming this week, man. If we could hold this inside week, that would be beautiful. And then break it next week. Yeah, I still like it. So what's that level that we really got to start getting under? It's going to be about right here, right? About 39.50. You start breaking below this, everybody's trapped. You're going to come down here to that. You'll bounce back. You'll do a retest on that point of control. Then you'll roll over and you'll at minimum double bottom. What do I think of Tesla today? I think Tesla's earnings were absolute garbage, and the company is overvalued. And that if you're buying Tesla, you're either a complete idiot or a magnificent genius. And I can't tell you which one you are. I have no idea. Um, I can't see the value of Tesla here. I understand your idea of robots taking over the world and driving, having your car make you money while you're sleeping at night because it's an Uber by itself. But I mean, would you rather pay $130 per every dollar earned on Tesla, or would you rather pay $30 for every dollar earned on Nvidia? Like, what in the world? What? No, I'm buying Nvidia over Tesla every day, all day, forever. We're at $30, which is high, but we're at 130, 150 on Tesla. No way. It's absolutely garbage. Now, from a charting perspective, yeah, it's flagging out. If they can bottom this out here, right, then we're going to be much closer to a breakout. Why? Well, okay, you're eventually going to do this, then you're going to do this, and you're going to get really tight, and then you're going to pick one way. Yeah, I mean, Musk. Listen, I would never bet against Musk. Musk is one of my heroes. He's the smartest man on the planet, in my opinion, and he's done more for mankind than I ever will. I love him. Way to go. But strictly from a valuation perspective, it's nuts. That's why I say you're either a complete idiot or you're a complete genius. Maybe you see Musk's vision more than I do. And so you're buying it. And the same thing was true over here and over here and over here and over here and over here. And people bought it and they were right. But we've literally gone nowhere since the late 2021. You've gone sideways for 4 years now. It's been dead money. So no, no, I wouldn't say so. So the question here is this ASTS. So what pattern do we see here, guys? You can call it inverted head and shoulders, you can call it cup and handle, you can call it whatever you want. But this right, this area is the high. I still view this as the cup and the handle. You broke over a little bit of high here comparative to that. It's still fine. And again, the understanding of what's happening within the chart, that's the most important thing. And it's what's happening in this chart and with every cup and handle is you're pushing back to a previous high-ish area. You're finding resistance. You're going to create the handle, which causes the pullback. And then what does the handle have to do? The handle has to hold a certain area that will keep people in the trade happy. Where is that level? You start breaking below these lows, these people, all these people that have been buying here are going to stop out. And that's that level. That's when the chart breaks. That's when it's no longer a cup and handle. It would be like a double top, and you're coming down and breaking the neckline. Yeah, absolutely, on Apple. So on Apple, what we want to do is here. I'll type it out. So we go ahead and we buy to open. You guys see that on my screen? Yeah, okay. I think it's there. Apple, August 1st, 2020 call, right? Go ahead and we buy that. And my price was 279. Now, what I do next is I come in here and I put in a hard stop, meaning the computer is going to do it for me. And a profit target. So what order is that called? What do we call that order when we put it in the system, guys? So the computer can do the work. Yeah, it's a one cancels the other order, right? So if I get filled on my profit target, it's going to cancel the hard stop. If I get filled at my hard stop, it's going to cancel the profit target, and I'll get out of the trade. But then I set up another trade where I have not bought this yet, but it's a conditional thing where if this triggers, place this order, right? So if I get filled on bought to open to 30, then it creates an OCO. Immediately, 220, hard stop. And what would my profit target be on this one, guys? Yeah, exactly. 279. Right back at my entry. Is this an OTOCO? Yeah. This one's called one triggers all in mine. And so it's like if the following order executes in full, place this order. And then the order that you place is the OCO. That's how I set it up in E-Trade. And then literally you can walk away. And so I'll give you another example of when I was doing this. I was literally doing that right here. So as we're coming in and creating this handle, I'm like, all right, bam, let me buy this. If it gets below this level, I want to be out, blah, 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 blah. I'll put in my partial profits. And so this is how you can, if you can't trust yourself to stop out, or you're not going to be at your computer, or you don't want to look at it anymore, then set those up. Do you guys remember? Does anybody remember the profit target on these? Plus, what were we looking for? It was a 36 cent, 37 cent ATR, right? As we get closer to it, I'm sorry, delta, and then the delta will go up, right? So for me, the bottom side that I would take profit on is 175 to 190, somewhere in that range. So if you want to set your profit target for to make 175 bucks, 190 bucks, whatever it is. And the way that you would figure that out again is you simply add what you're paying, right? So 279 plus, if you want to do the low side, a buck 75. If you wanted to do the high side, plus 0.15, 469. Does that make sense? What's the minimum risk reward I would trade? That's a great question. Um, and Doc, it's not the correct question. So to continue that thought process out, Doc, you would have to tell me what I'm trading. And what I mean by that are what are the statistical advantages of me winning or losing? What's the max that I would risk on a trade that wins 90% versus what's the maximum that I would risk on a trade that wins 15% of the time are very different. Does that make sense? And so to say, hey, this is my R, I need a 1 to 2, and this is going to be my max risk, and maybe I'll go 1 to 3, 1 to 5, or whatever it is. It's always depending upon the trade and the range. So when I'm looking when I'm looking at something to take a shot on, when I'm buying on the lower levels, my risk reward becomes very very 1v1. So like I'm risking 50 cents to make 50 cents. I'm okay with doing that. But I need the trade to be at a point where I'm going to win 60% of the time. So would I do that? Would I do a 1 to 1 on a double bottom? Absolutely. Yeah, I would. Would I do a 1 to 1 on it hitting the major point of control? Absolutely, because that's going to win 80% of the time. I may even go less. You see what I'm saying, Doc? And so for me, the the way that I weigh risk reward and everything is basically the amount of money that I'm going to make. Is it worth the headache? So again, if this offends you guys, I apologize. But what I teach my daughter and my son is, I don't know if I should say this. You guys might not like me anymore, but I guess the political correctness way to say this is there's different caliber of people in this world, and if you hang out with if your girlfriend is one of the lower caliber people, and then that high caliber person comes along, you're too busy with that low caliber person, then you're going to miss a very grand opportunity. So in trading, is it worth the headache? Man, do I want to play a B plus, B minus, C trade? Do I really want to absorb here and take my eyes off of what could be an A plus setup? You see what I'm saying? So there's a lot of risk reward, 1 to 1, 1 to 2, 1 to 5 things that you have to take into account where you can't just say, hey, this is the minimum or maximum I would do, right? What's the correct way to say that? It's like something value. It's something like time value of something. I forgot what it's called. Don't get mad if you get dirty when you're playing in the garbage, right? Yeah, this is the no political correct. Anytime I'm on the mic, that's 100% true. Yeah, opportunity cost. Thank you, Derek. There you go. Okay. Do we have any other questions, guys? And next week, I'm going to be here tomorrow for a little bit, but my kids, I have to go pick up my kids today. And so I'll be in and out tomorrow. But next week, I'm going to really start this journal, and I'm going to share a link with you guys so that you can have access to the journal, so you can see the buys and sells and the chart and all that kind of stuff. And then at the end of the week, my goal, depending upon how many I do, is to go through and show you why we were playing the chart, how we were digging the ditch, when we dug the ditch, how it opened up our risk profile to allow for more than a 1 to 1, so that we could get these big moves. Okay. Yeah, of course, Angela. Yeah. It's I'm serious, guys. It's all about learning how to fish for yourself, and once you do it, I can't even begin to explain the difference in your perception of reality because there's nothing that you have to do. Zero. I can do whatever the heck I want to do whenever I want to do it. I don't got to get up for work. I don't got to go take care of the stores. I don't have to worry about losing 30 employees. I don't have to worry about my general manager stealing from me. Like it's just you wake up and you're free. Okay, yeah, I'll stop this recording.